work together 15-4 with you. And I've gone in and filled it in already because it actually takes quite a bit of time to do, and I didn't want to make a 30-minute video. So I've posted all of these. So when you open yours up, you're going to need to post all of these transactions. And that takes a little bit of time, but you'll go down and you'll post those. And if you need to pause this video while you go do that so you can look back at it, that's great and wonderful. Go ahead and do that. So you will post all of those. And then you'll go on to the next step. And the next step is an adjusted trial balance, the part one of it. And when you do it, you will fill in the blanks. They've got some blanks in there for you, the name of the company and the different ones. And you'll need to go back up and look at your general ledger accounts to fill those amounts in. I'm going to go a little bit fast because I don't want you to just sit here and do that. Copy mine. Now I filled in totals here, and you're not supposed to fill totals in there, so don't do that when you do yours. So again, pause the video, fill in your amounts there, and don't put any totals in. Do write the word totals, but don't fill any amounts in there. Then you're going to come over to calculating your federal income tax. So when you're doing this is where it gets a little bit tricky. And if you look back on page 457 in the textbook, it talks about how you calculate that. So you've got to get the total of your income statement credit accounts and the total of your income statement debit account. So on your adjusted trial balance up here, they give you everything. But the income statement debit and credit columns are going to be, if you remember, income statement credit is going to be money coming in. Income statement debit is money going out. Those accounts start at the income summary account. You will include income summary, but so you'll add up all your credits and you'll add up all your debits. And that's where I came up with these amounts. You don't include your assets, liabilities, or owner's equity accounts in there, just your revenue and expenses, the money coming in, money going out. That's what these totals are. You subtract the two and get the amount of federal income tax or net income before federal income tax. So then we have to figure out the amount of our tax. And you're going to look at the chart in your textbook on page 458. And it's going to tell you in there what our tax rate schedule is. So we put our net income before federal income tax that we figured here. And on our chart, it tells us that we have a column for over. So if you made over this amount, but not over the next amount is the second column, then it tells you what you owe. So we fall in the column of over $100,000, but not over $335,000. So we're going to take the net income before federal income tax minus the amount over, which is 100, not where it says not over, which is the 100,000. So that leaves us with $41,587.69 that we got to figure our tax on. And then our chart tells us that whatever is over that, we're going to pay tax on 39% tax on that amount. So we're going to take this amount times 39% gives us $16,219.20. So then you look, because in that chart, it tells us that anyone in that tax bracket is going to pay $22,250 plus this marginal income tax amount, this extra. So that's where I've added those two, so that our total federal income tax is $38,469.20. So then when we come to the next step to journalize our federal income tax, we have to first start with what our federal income tax, what we owe is this. If we go to our general ledger account, we'll see in our federal income tax expense account, scroll all the way down towards the bottom, that we've already paid $32,000 into the government. And when I went through the lessons, I talked about how corporations make quarterly payments. Sometimes they have to do monthly payments. It depends on their tax bracket. But they pay money in throughout the year to the government towards their taxes, so that at the end they don't have bazillions of dollars to have to pay in. So our company has already paid 32,000 in. We owe 38, 469.20. So the difference of what we've already paid in and what we owe is the amount of our adjustment, and that is $6,469.20. So you're going to record that adjustment with a debit to income tax expense and a credit to income tax payable. That goes into income tax payable because we're going to pay it into the government, but we're going to put it in that payable account until we write the check. And then in the next step, you're going to post that transaction to your ledger. So you're going to post that. And I did that there. You can just see where I put the numbers in. So go in and do your posting there. Apparently, I forgot to bring my balance over here on federal income tax payable. So don't forget to do that. And then you're going to fill in those amounts on your adjusted trial balance. So most of your adjusted trial balance is already filled in from like step 2 or 3, whatever one we did that on. And now you're going to go in and fill in your federal income tax payable balance and your federal income tax expense after that last adjustment was just posted. And then you're going to figure your totals up here. I'm not going to give you those totals because I want you to do the math to make sure that they balance out. And then when you're done, grade your final step.